This week, Ben and I are going to be talking about some new USDA numbers, wrapping up the 2024 year, and also looking at soybean crush and where we sit on some of those record numbers. Hello and welcome to the weekly commodity market update. I'm your host, Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
Everything is great. How are you today, Will?
A little bit under the weather, but we're getting over it. It kind of came in a little bit Saturday night, hit me Sunday, and we're recording on Monday this week, and it's finally kind of leaving. So a quick little, like 36-hour in and out deal.
Yeah, I got sick over the holidays as well. I think there's just kind of a head cold respiratory thing going around, and it's not fun, that's for
No,
sure. So my sympathies are with you.
definitely not. Talking about sick, we did see some sick price changes, not really that big, but looking at an update on where we sit on the week, looking at that March corn contract up 5 cents at 457, December corn up 6 cents at 445, March soybeans up 6 cents at 997. November soybeans up 5 cents at 1013. Soybean oil on a cents per pound basis for March was about flat on the week at 40.33. Soybean meal on the short ton for March down $4.50 at 307.30. The 2020 or sorry, March wheat crop down 8 cents at $5.40. Looking at that cotton crop for March was about flat at 68.68. And then that West Texas Intermediate crude oil contract up $2.29 a barrel at 72.82. So, Ben, largely the story continues of a lot of sideways, mostly movement on the week. Losses that we did see, we saw that coming into the soybean meal complex area just a little bit in that increase on the oil front. So what's your real big takeaway looking at these prices out of the holiday season?
Sure. Yeah. So some movement. We've seen more movement here the last 2 weeks than I think I would have anticipated a month ago, and so that's I think notable. Some of that is due to just very thin trade. You get a couple of traders in there, and it creates some moves. Here, as we get ready for the week ahead, I'm going to say that I don't think we'll see huge moves in the market. I could be wrong, but at least up until Friday when USDA releases their updates, I don't think traders are going to get too excited about making big position moves. And so,
Yeah.
maybe some sideways trade here. The one thing I will say, so this is kind of on the futures market is the price, or that is the futures market prices you read. I will say we have seen basis markets pull back a little bit and weaken just because of the futures market. These little rallies we've seen in the corn and soybean markets have really allowed the elevators or to have the futures market do their work for them. Producers are seeing cash prices increase or stay the same, and
Yeah.
and that's coming at higher futures prices, not necessarily higher basis values. And so that's been a notable thing I think here the last couple of weeks as well.
Yeah. Well, Ben, just a second ago, you mentioned maybe some sideways movement until we get the fresh USDA numbers coming out. So USDA is going to release one of their bigger reports of the year, capping out the 2024 year, looking at production there, and basically their snapshot of the year. How big of an adjustment do you maybe expect to see in this final report, and how much do you think it could sway soy traders' perceptions of the year?
Yeah, some people think this is the biggest report day of the year, and it certainly is a big one. For me, I don't know if it's the biggest one of the year for me, mostly just because I think the planning intentions report in March has a tendency to be a bigger surprise, provide some more information to the market that is useful in a lot of ways, and also kind of help set the stage for the next couple of months after that. The January report is just a lot of data, and that's why it's such a big report day. Is not only do we get information about the size of last year's crop. The last time USDA updated the size of last year's crop was in November, so it's been 2 months. So we get an update there on yield and production across the country. We also get an indication of grain stocks, which is also an indication of crop size, right? The bigger
Yeah.
supply you have, the more grain you have on hand. But it also gives us an indication of how much grain was used during the first quarter of the marketing year. And for corn and soybeans, especially the first quarter of the marketing year, is a a relatively large useful period because we're exporting a lot, we're consuming a lot for feed grain.
Mhm.
There's just a lot of uses of the category. So if we see lower grain stocks relative to the updates to the production numbers, that could mean that we saw you know uh, higher use during the period, and that could have implications for future quarters. So that's why the January reports are a big day. It's just there's a lot of data that comes out from this. So I'll start with
Yeah.
corn here for just a second, make a couple of comments, and then we can talk about it. Currently, right now, the U.S. corn crop for 2024 is estimated at just under 17 billion bushels. That's production plus imports plus beginning stocks. So 17 billion bushels. Last year on December 1st, which is released in January, we had 12.2 billion bushels of corn on hand. And so I think the broad expectation is that we'll move higher than 12.2 billion bushels. The high water mark here the last decade has been 12.6 billion bushels. Some
Mhm.
people think we could go up and test that 12.6 billion bushel mark. I don't know if we'll quite get there. I think something more in the lines of like 12.4, 12.5 is more reasonable, at least in my opinion. But
And that's on the high
certainly,
side too, right?
yeah, but
Yeah.
certainly a lot of bushels that are just going to continue to weigh on this market as we head our way into spring
Yeah.
planting.
And it really feels like if there is a surprise or maybe a deviation from the full expectation, it might be on that higher side. So then, kind of taking the wind out of any momentum that the market might be gaining moving forward. But Ben, looking at some other places around that could be impacting soybean specifically, we're continuing to see some, soybean crush numbers above trade estimates. How much of a factor is this maybe aiding the soy complex as we move forward through January?
Yeah, so we have official numbers now through November. The National Oilseed Processors Association provides us a little bit more frequent real-time data, but official estimates are updated through November. In November, we crushed 210 million bushels of soybeans. That came in above, expectations of 207.5 million bushels. That's also about 10 million bushels higher than where we were last November. And so yeah, this just continues that theme, I think, in the soybean complex of we are crushing a lot of soybeans. The demand from soybean crush has been strong. It's You've heard me say previously, maybe it's not as high as what the expectations and or the anticipation was building up to be. Right, the expectations were already very high, and so even though we're at record levels, it's maybe a little bit disappointing to the market. I think the big question for the soybean complex moving forward, especially as it relates to crush, is we still don't have any guidance on the renewable tax credits that were passed under the Inflation Reduction Act. And on top of that, as of December 31st, or I guess January 1st of 2025, so just a week ago, we no longer have the blenders, the $1 blenders credit
Mm.
to use for renewable diesel production. And so I think all of that kind of clouds the outlook because it reduces the incentive for biodiesel producers, for blenders, and users of the product moving forward.
Well, Ben, shifting gears into something that's going on right now across much of the Midwest, and this is could just it's more so just a blip, but looking at the severe weather that we've seen, a lot of snowfall, a lot of icy conditions out there. Do you think this is going to impact much delivery of grain into the market in the short term? Probably not too much, you wouldn't imagine, but how does this impact maybe the short term day-to-day operation of what the market might see?
Well, okay, so I'm gonna say that we have seen, or we usually do see, evidence that grain flow is impacted. The one that usually comes into mind is ethanol producers,
Mm,
or those that it could be a biodiesel production facility as well. They use natural gas as a part of their production system, and so when we get these bitterly cold periods like what we're seeing right now, it creates higher demand for natural gas to heat homes, residential homes, and frankly even commercial buildings across the country, and that causes natural gas prices to spike. That provides an opportunity for ethanol plants or biodiesel plants to then sell their natural gas that they have purchased back into the market at higher values than what they bought it at. And so it does sometimes slow down. We've seen evidence it slows down, renewable fuel production, and then they might still continue to take grain, but they can only do that for so long because many of these places only have so much storage. They don't want to eat that capital cost, and so that's one of the challenges that we sometimes see is delaying delivery to renewable fuel facilities.
Yeah. Well, at any rate, you want to bundle up and stay warm. Currently down here in Texas, I know it's been a hot topic of discussion ever since the weather hit 31 degrees, which is a little comical to me, but it's here nor there.
Sure.
Ben, moving into the rest of the week, what should farmers and ranchers be really paying attention to that could move the markets?
Yeah, we've got a big week. After a couple of quiet weeks, we've got a big week on pretty much every front. And so I'll go through this as quickly as I possibly can. But on the production side, Wednesday, January 8th, we get state stories from a number of states across the Midwest. The big reason I'm interested in these reports is it gives us an idea of winter wheat conditions. As a reminder, during the winter, we don't get weekly crop conditions reports. And so for the winter wheat crop, these state stories kind of help give us some information of what's happening out there. It'll be especially interesting to see what people have to say or reporters have to say about the wheat, given the cold snap that we've seen, and especially the hard red winter wheat belt. Then we go to Friday. We get some economic data out Friday morning. U.S. wage and unemployment report comes out. It'll be interesting to just kind of follow all that. And then we have the slew of January reports, grain stocks, production reports for 2024. Yep. We get the updated supply and demand, winter wheat and canola seedings, big report day. And so all of that will be impactful to the markets as we look ahead.
Yeah, so a lot to keep an eye on. Well, viewers and listeners, if you want to learn more about us and what we do, or our sister program, the Weekly Livestock Market Update, you can do so at brownfieldagnews.com. I'm Will Robinson on Brownfield, joined by Ben Brown. Thank you, guys.